everyone to the Trust the Plan podcast. I'm Nick.
And I'm Jim.
And Jim, today we are talking about the peak process.
The process, I like it.
Trust the plan.
Okay.
Trust the process. So for those of you who are not clients, right, and have not been through, our process, we made this, actually helped us make this, chart just to show, what the experience looks like. So the first step in our process, is getting to know you, having a meeting, having an introductory meeting, and it gives you a chance to learn about us, and it gives us a chance to learn about you. And ultimately, the goal for the meeting is to find out if we'd be a good fit working together.
Right. It's not just do we like each other, but is the work that we do and the services that we provide, can they benefit you? Can they help you? Is that what you need? It came in looking for.
Yeah, and sometimes people have a certain idea about what they're looking for, and they learn so many more things than now they're focused on something else.
Yeah, they think they know what they want, but they don't know until they learn more.
Right. And so usually that's one meeting. Sometimes we have two meetings like that, to get to know each other a little more and to make sure that it is a good fit. But afterwards, we've gathered a lot of data by that time as well. And so it's a pretty efficient meeting where we know we have a good sense about your financial position. And if we're going to start moving forward with the process, since we already have that, we can go ahead and build that financial plan right away. And so in that next meeting, we've already learned about all your goals and everything. And so we're presenting, in most cases, a pretty, high quality draft of what we see as the projections.
Yeah, I mean, that meeting's a great opportunity to have a really good conversation about, here are the things you're doing now. If you continue to do them, how does your financial plan look? Can you retire when you think you want to retire? Will you have enough? Will you be able to spend as much as you're saying you want to spend? So those kind of things all start to come out in that meeting, where we can confirm the assumptions, make sure that we're on the same page. Is this all how you're thinking? And it usually lends to really good conversation.
Absolutely, and some of the topics covered, right? We talk about goals, but some of the foundational things, right? Cash flow, your income and expenses, your debt and a debt payoff plan. What are the savings that you're doing, and are we following our order of operations in terms of where we want your savings to be? Are we taking advantage of all those tax breaks, and are we tax optimized? And are you using a CPA, right? We want to make sure that you're getting good tax advice besides from us. And then estate planning. So many people come in and they've never had a will or a power of attorney, and we can help them get that going. We're not lawyers, and we don't write your will, or we don't give legal advice, but we're savvy enough to know who to send you to.
Yeah, we have a good network of people. We know the things that we need to be looking for and the things we need to be on our radar.
Absolutely. And then investments. So sometimes this planning and investment meeting are combined into one big meeting, but the investment meeting, we want to learn about risk. So we have our risk quiz, which has changed over the years, but ultimately it covers 2 points of risk. One, mathematically, how much risk can we afford to take? And oftentimes that comes down to how much time you have left until you need the money. And you might be retired and need the money already. You might be in that retirement red zone where you have just a few years left until you need the money. Or maybe you're still in the accumulation phase and it's years away, but that's one thing that we look at with risk. And the other is emotions.
Yeah, because that's really huge. People, we can talk about risk all day, but it's about comfort level. Where are you comfortable with your investments? At what point, will you panic if the market goes down? At what point will you feel enough pain that you can't take it anymore and you want to move on, pull out, and which is typically done at the worst time?
Yeah, exactly right. Our job with risk is really to make sure that we're taking enough risk to reach the goals, but not too much where you're going to shoot yourself in the foot.
Right. Yeah.
And so once we have our risk strategy determined, then we can identify which strategists we're going to use to meet that risk objective. So, Jim and I don't sit around picking mutual funds and ETFs. We partner with all the major strategists that you're familiar with, and we're the CFPs and they're the CFAs, So we're going to lean on them to help build that portfolio. And so with diversification, it's not just stocks and bonds, among other alternative investments, but it's diversified by strategist as well.
Yeah, I mean, there's a lot of really smart people out there, a lot of really good research teams, and we think that's one way to diversify even further is by leaning on them and saying this group is an active manager. They want to be in and out and picking different companies based on market events. We have passive managers that say we just think this is our allocation. We want to stay the course, keep it with these companies, use low-cost investments. So, looking for opportunities to pair the different portfolio construction ideas, I think is really a great way to add an extra layer of diversification to what we're doing.
And when we pair with our strategists, we're focused on ETFs to make sure that the portfolios are as low cost as possible and tax efficient. So generally, that is how the investment meeting goes. And of course, we're seeking to gain your approval before we make any implementation. And so after that, I like to use the term cruise control because we're cruising down the plan, we're following the plan, right? The investments are in place. We will review investments and managers to make sure that we're happy with what's going on. We hire and fire the managers. We're slow to hire and slow to fire, I would say, is our style. But we use the term here, annual rotation. So it could be that we're on a path of 2 meetings a year, 1 meeting a year, or as needed. And in our meeting, right, we have the plan in place. We're making sure that anything that's new is updated into the plan, making sure that we're following and progressing as we had.
Right.
What's the term I'm looking for? That we're progressing at the pace that we hope for, and making sure we're on target, I guess is what I'm trying to say. And so then we're also reviewing our performance, reviewing our strategists, and that's it. So the plan and the investments are, I think it's like 1A and 1B in terms of what we cover in those meetings and the importance. They're both important, but we like to lead with the planning.
Yeah, and like you said, in that annual rotation, it's making sure that we're staying on track and we're continuing to do the things that we decided were good next steps and good things to do to put the plan on, take that plan from good to great. So it's just a good time to catch up, keep some accountability, and make sure we're still doing those things.
Very good, Jim. So if you have a portfolio of over $500,000 and you're looking for a second opinion, maybe the advisor that you're working with doesn't do any planning. Maybe they don't ask you about your goals. Maybe you don't have a financial advisor. But if you're looking for a second opinion, reach out to us at peakwm.com and you can schedule online.